This is Real Estate Copilot. It doesn't matter if you're a client or an agent, I can help guide you through your real estate journey. Get ready for takeoff. This is Real Estate Copilot. I am your host, Josh Shives. Joining me, as always, our in-house marketing guru, Nelson Pelton.
How's it going, man?
Hey. Today's guests are Jason Everette and Scott Mooney of Fairway Mortgage Everette team. You guys want to introduce yourself?
Yeah, I am Jason Everette with Fairway.
And I'm Scott Mooney with Fairway Mortgage.
You can talk a little bit more about yourself, like how long you've been in the business.
Yeah, super excited to be here. When Josh approached us with this, we said absolutely, we'd love to come and have a chat. And so Jason and I have been doing business together for a couple of years. He's been in the industry a little longer. I think I'm coming up on 3 years in mortgages, and it's been a fun ride. The last 18 months especially, learned a lot. I don't know about you, Jason.
Yeah.
How many years you been in it, Jason?
I have been in it. This year will be 10 years.
10.
Wow.
10 years. So, cool. Been at a couple different places, and like Scott said, the last 12 to 18 months have certainly been a little bit trying and unique, but definitely a learning experience. And at the end of the day, I think that allows us to help a lot more clients have a little bit more knowledge. So
cool. Yeah. So today's with our guest here, today's main topics is going to be mortgages in general as a whole. Cover a couple different bullet points here, but I think we're going to start with the ever-changing rates, which will have to do with that 12 to 18 months that you were just talking about. Tell us what's happening with mortgages over the past year and a half.
Yeah, go ahead, Jason. I'll chime in.
Yeah. So those people that have been paying attention, both buyers and sellers, over the last 12 to 18 months, we've seen a lot of, I'll call it economic turmoil.
I think that's well phrased.
Yeah. And with that has come certainly a lot more volatility than any of us are used to seeing. So that brought not only tightened guidelines, so buyers had to fit a smaller box. It was a little bit harder to get approved for a mortgage or qualify for a mortgage. And then coupled with the fact that the elephant in the room, the highest rates we've seen in about 40 years. So you lump those two things together, and it's certainly created a different landscape to real estate than any of us in the last 15, 20 years have been accustomed to.
Yeah, it's been all uphill for the last while.
Yeah. And I think to that point, I think having an abundance of products has kind of set us apart from a lot of the pack, a lot of our competition. And I'll let Scott kind of chime in here, but I think being able to appeal to a diverse group of buyers from all different economic walks of life, and it's been able to allow us to still close loans, still do mortgages, and ultimately get people into home ownership.
Just work a little harder, right?
That's right.
Yeah,
That's right.
Got to stick your nose to the ground and keep going. You can chime in whenever you want, Scott.
Yeah, I mean, the relationship in real estate, mortgages, for people that don't know, we work very hand in hand. And when you guys see a market change, we see a market change. And, for everybody out there that maybe isn't following as close as we do every single day,
or
you go
turned
back
the TV on in the past year and a half.
Right. You can watch it all over any news show that you want to see. Mortgage rates up and down. Everybody wants to talk, what's your rate? You go back to 2020 and the whole world changed and interest rates dropped significantly. 2021, a record year for real estate and record year for mortgages. It was a great time, wasn't it?
Yeah, everything was flowing, everything was going. I mean, it was good and bad. It was great, on the flow standpoint for sure, but it was a hectic time at the same. Everybody was. I would almost say that you were doing a lot more deals, but you were working harder then than you are now.
Yeah, different set of problems. I mean, back then the sentiment from all of our buyers were we can't get we can't get in homes because we can't even get in to see them. They're selling so fast. And
Different type of work. So like right now you're working to get business, and then the business was flowing, but at least on the real estate side, but you were just working to get them the property over and over and over again, because it was 37 offers on each house.
I would have hated to be an agent who worked with a lot of buyers at that time. You were running around with like a chicken with your head cut off, running to different properties, trying to get people in.
Absolutely. Now, me as a complete outsider, so do you guys work mostly with buyers or with the agents that are representing your buyers?
Yeah, so we solely work with buyers doing mortgages. So inevitably, some of those buyers have a property to sell, so we're indirectly related to the sales side there. But I would say a majority of our business comes from agents who work with buyers. Some of that, if an agent who does a lot of listings, usually that's the first point of contact for someone who's ready to sell. And then if they're selling, they need a place to go. So it's kind of a domino effect. And a lot of those listing agents will say, hey, I've got a client who's selling a house. And then they'll send them to us, and we can kind of prepare them based on what they're going to net and what their situation is.
One thing I'd say where they do get to work with sellers is like, if they do have the relationship with the realtor already, sometimes you'll see them actively participate in, an advertised buy down or an open house or something like that, to just to be on site and ready to roll in case a buyer comes in. But they're going for the buyer, but they're actively working with the seller, I guess, in that standpoint.
yeah, I mean, I would say it's a small town here, Lafayette, West Lafayette. I still consider it a small town, and most of the time when we have buyers and sellers, we know both of the listing agents on both sides, and it's quite common where we'll actually know the buyer and the seller. It's a collective goal for everybody. We always say, let's get butts in houses and, do it the best way for buyer and seller.
Yeah, everybody works together. But
I think that's one of the biggest things in this market is it's truly been from all real estate professionals, whether that's title companies, inspectors, realtors, lenders. It truly has been all hands on deck for the last, let's call it 18 months, because things have been difficult for everyone. So before it was, kind of the seller held all the chips and, maybe didn't have to negotiate as much. And that landscape very quickly changed when the rates shot up. So it's been, I think, refreshing, I'll say, for us to really feel like it's been a true team effort on all fronts. Appraisers, inspectors, realtors, buyers, sellers, lenders. Everybody has been truly all in to try to help people.
yeah, if you would have rolled the clock back that 18 months and said, hey, we need $5K in closing costs, it just wouldn't have happened. It would have been
Good luck.
So in recent months, then, with the market how it is, do you see an increase in first-time home buyers or people that are selling and purchasing a second home, or
I think this is a good one for Scott. Yeah.
Yeah, I mean, so what's really ironic is as the real estate markets change from 2020, we'll call it, to 2023, where interest rates are more than double. It's been interesting that our business has been very protected, and it's actually grown, which is the inverse to most mortgage companies. First-time home buyers are a huge part of our business. I mean, they really are. We pride ourselves in the knowledge that we can share with them, the consultations, and being an advisor, not just a lender. So first-time home buyers will always be a big portion of what we do. Buying and selling, contingent, yeah, there's still some people out there that are starting to kind of stir up a little bit. A lot of people are locked on those really juicy 2 or 3% interest rates, and they just don't want to leave those. And
for sure.
That's okay too. So those will start to free up, I think, as you see rates come down. So a little bit of both, but a lot of first-time home buyers.
As you see rates go down. So this is opinion, we'll state that, but prediction for the year.
Yeah, that's the $1 million question, right? I think the longer you look at things towards the end of the year, it's going to get better. I really, and that is my opinion, but we do a lot of reading. We have a lot of industry experts that speak to our company, and generally, at the end of the day, it seems to be a consensus that rates are coming down. Now, how much?
Should we
think
all
there's some
pull out?
debate there.
Should we pull out $20 and everybody write a number on it right now and see what we're?
This
That'd be
week,
a lot of fun, yeah.
this week there's a lot of economic data released that will be kind of the initial shock and awe of 2024. So over the next 2 to 3 days, we'll I think have a little bit more insight than we have right now.
Okay.
But yeah, I think the general consensus is just that things will improve. They've already started to. I mean, we look at just what, Scott, 90 days ago, September, October of 23, rates hit the peak. I mean, we were surpassing 8.25 on a 30-year fixed rate mortgage. So again, that's a range depending on the buyer's statistics. But yeah, I mean, we've already seen some improvement from the market, and again, ideally that will continue. So
Okay. So they avoided the question of what the prediction was, but other than it would decline. I mentioned this on the last episode, but I was at a conference probably like a month and a half ago now. The Housing Wire guy was there that does all their data, and his prediction was 5.5 to 5.75 by the end of the year. And he said there was one scenario, and some of that economic data would dictate that. But he said if an unemployment rate hit 300,000 people, then you could even see a high 4. What's your opinion on that?
Yeah, jobless claims, inflation, bond market. There's a lot of factors to that. But obviously, as the economy shows signs of slower growth or too slow of growth, that's when our rates come back. Everything's pretty much tied to that inflation to some degree. You look at your average 30-year fixed right now, sitting just under 7%, just over 7%, depending on the day. Is there a chance that we could see rates in the high 4s? We sure hope so. I don't know. It depends on how optimistic.
I think that would be a very invited.
You're going to see the real estate market. You're going to see everything really tick up if that happens. So how much does the government want things to really increase?
Well, they always talk about, if you follow the news, they talk about the soft landing and harsh landing, and to the Housing Wire's knowledge, I mean, if unemployment spikes really high, then obviously they want to bring that down. So
yeah, that would be a turbulent. I'm not sure if we would call that a crash or what, but that would be some sort of turbulent landing.
When we talk about rates and changing and ever changing, and you said crash, how many times did you guys hear? Because I know on the real estate side, as these rates skyrocketed, we kept hearing like 2008, 2009 crash. It's coming, and I'd never believed that. But on your guys' side, you probably heard the same thing. And what was your response to that?
Yeah, I mean, we've had some drinks and talked about this just personally. I know, but the crash, like the great crash, coming into 2023, where everything just tanks, like 2008. I think we both agreed that it wasn't going to happen that way. And I think we're seeing that play out. I don't know what your take is, but I don't see a crash.
I mean, I think in its simplest form, it's back to supply and demand. In 2008, 2009, there were too many homes. Mortgages were too easy to get. People who were maybe not supposed to qualify for a mortgage were very easily getting a mortgage. And now we're on the exact opposite of that. So sure, things have slowed down a little bit from a buying and selling standpoint, but if you just look at the inventory, and I don't know if, Josh, you can speak to this a little bit, our inventory nationwide is still
very
at a record low. And the demand with the increasing rents, people want to get out of renting and own a home. So I think if you just look at the simple supply and demand of it, it's hard to say that we're going to see a crash when there's still so many buyers and so few homes available.
I agree. That's pretty much
the math isn't there.
That's my answer too to most people. We heard it a lot, or my agents heard it a lot, and I was just curious if you guys heard it as well. And when we look at Tippecanoe County as a whole, with the growth pattern, the supply and demand, and I know you guys do outside of Tippecanoe as we do, but it's kind of our home base. But there's just, in my opinion, there's no mathematical equation that makes this area go down.
Yeah, and I mean, we talk to people who are relocating for various jobs at the university or manufacturing plants. I would say weekly we talk to someone that's moving from out of our area or out of our state. And the thing that I always say is, like, Tippecanoe County, Lafayette, West Lafayette, we're very well insulated with not only Purdue, but the variety of manufacturing facilities we have, a lot of blue collar jobs, a lot of people that are hungry to work. And I think that plays into it a little bit too. This is just kind of a desirable pocket of the country for people to live.
Great place to retire. Great weather. I mean, everything's perfect here, right?
We haven't seen the sun in like
Been
3
great,
weeks.
Yeah, I think we're gonna see it here in the next.
I was looking at that
Not
yesterday.
tomorrow, but what's today? Tuesday. So Thursday, Friday, Saturday. I think we're gonna see sun, guys.
Here, my hands
Or
are freezing
40s and
off
sunny,
like bricks,
maybe
and I'm
around
ready
a
for
golf
some-
or something.
Oh, yes,
Yeah.
that sounds nice.
I don't know if you'll be able to play golf. The course will be a little wet.
Yeah, a little soggy.
But
Yeah, last week I had to reschedule a lot of my shoots because it was so foggy I couldn't get what I needed to.
Yeah.
I wonder about that. How do you take pictures and make a home look nice with this weather, right? I mean,
Well,
I don't.
no, that's easy with Photoshop, but with flying the drone, I can't legally fly if visibility is under 3 miles, and depending on the height of the cloud ceiling. So last week, the clouds were like 300 feet, and I have to fly 500 feet below the clouds, which means I can't take off.
so you're part weatherman now
Yeah,
too.
yeah, yep.
Yeah, we had to reschedule some team photo shoots the last couple weeks because our photographer was like, "Yeah, it's way too gloomy out. I can't make this look any better." So,
Wah, wah.
yeah,
Yeah. I was supposed to be on a flight on Sunday morning to Iowa, fun little city over in Iowa, and we couldn't take off for visibility, so we had a delay. It's been real bad. Yeah. Wah, wah. But okay. So that's a little bit about mortgage rates and ever changing and our opinions on some things. We're going to move to the next topic here of different programs you guys offer, or maybe you don't even offer, but are available out there. I know you guys offer most of the spectrum, but let's just talk about different mortgage programs as a whole and what's available to buyers.
Yeah, I'll tackle a couple, and then I'll let Jason cover a couple as well. You know, the thing that we pride ourselves on, big reason why we really love Fairway and Advocates is that we can do so many different programs. Getting people in homes, it can be a challenge sometimes. You know, if you don't have a lot of money saved for a down payment, maybe you have non-traditional credit. Maybe the way that you're paid is a little bit interesting. You know, maybe you're not a W-2 employee. If you don't fit that box, that's okay. Let's figure out a solution, and I think we really pride ourselves on that. A couple things I'll touch on. We do a lot of VA loans for veterans. Fairway is huge on veterans. In fact, we try to give away multiple service dogs every year at functions to deserving veterans, and VA loans they're a really great tool for a zero down buyer that's an eligible veteran.
Is that the red shirt golf thing you do?
Fairway
AWI.
Red.
Yeah.
AWI. So on Fridays, you'll notice wearing red a lot. Red Fridays. AWI. You want to elaborate on AWI?
Yeah. AWI is a nonprofit that Fairway actually owns. It stands for American Warrior Initiative, and basically it's a way for us as a cumulative company to give back to veterans. So the biggest way we do that is by allocating service dogs. I think we do. They do them all over the nation, but we've already given away, I think, 2 this year, and it's only 1 month into the year.
And if you're an agent out there, if you're a real estate agent that's not been to one of those ceremonies with us, I mean,
It's pretty moving.
it's
cool.
Yeah.
It's cool.
So yeah, they do them all live. They surprise the veteran with a service dog, and most people know that those are not inexpensive animals to train and give away. So yeah, that's one thing we do. We do a big golf outing every year where everybody wears red. It's pretty neat. It took me a little while to get used to wearing red, being boiler country, black and gold. I don't think I owned an article of red clothing, but
2 days a year where we can't wear
that's
red.
changed. Yeah, that's changed.
Sorry, it's if it's Friday and we're playing you guys. We're still wearing black and gold.
Yep, that's right. So yeah, AWI is near and dear to us here locally, and we do a lot of VA loans. So
VA is one tool. I mean, we've also made it our point to kind of get into some FHA down payment assistance loans. The number one reason why first-time home buyers cannot qualify is because they don't have a down payment. We've got at least 4 or 5 programs right now, a couple of them through the state of Indiana that have actually very good, you talk about rates, lucrative rates for first-time home buyers to incentivize down payment assistance. I think FHA loans, I could be wrong, we're one of the top in the nation, if not number one for volume. What else am I missing there?
I think we are the number one down payment assistance lender in the state. And I think we have been for a number of years. And that's something Scott's really kind of honed in on over the last year and a half, is becoming a true expert on those products, because there's such a need for that. People may have good credit, they may have good job history. It's just, with inflation and the cost of living right now, it's hard to save money. So that's not a reason that should hold people back from buying a house. And Scott, I'm definitely proud to say that he's become the expert. And anytime I get one of those clients, I'm like, I'm not your guy, but I have a guy.
Scotty.
Yeah. So that's been very good for us.
Now, can one of you elaborate on the difference between like a USDA and an FHA? Because when me and my wife, we first purchased our home, we were straight out of college, had zero in savings, but there were some restrictions if we were going to find a home with the zero down payment.
Yeah, USDA loans they're loans that a lot of people can read about, and they gravitate towards USDA loans. They're a really, really good deal if you can qualify, really are. But the requirements for USDA loan, first of all, you've got to be in a rural area. That's kind of a challenge. West Lafayette proper doesn't qualify for USDA. A lot of the surrounding counties don't have a problem with that. You look at Howard County, Carroll County, Montgomery County, most everything qualifies. But the challenge with USDA loans a little bit is they look at your income a little bit differently. There are income maximums, so you can't qualify if you make too much money. There's also debt to income maximums that are capped at a fairly low rate, meaning that a lot of the times USDA loans are used for a little bit lower price tag. But if you qualify, it's an excellent loan. It is a true zero down. The monthly mortgage insurance is very cheap, and it can really help your payment. You look at an FHA loan, requirements are a little bit less stringent, meaning they're allowed to go a little lower on the credit scale. You can make as much money as you need to and still qualify for an FHA loan. But in terms of property requirements, if it's West Lafayette proper, you can't go USDA. You have to go with an FHA loan.
Sure.
Yeah, I would definitely agree. I think USDA, there really is kind of a niche for, there's a sweet spot. You can't make too much money, but you've got to make enough money.
You got to be able to pay your bill
to qualify. yeah. And you are. I mean, you can typically you can only qualify for so much. Your qualification is stripped down a little bit when you compare FHA to USDA.
That answer your question?
It does.
Okay.
Thank you, guys.
Long story short, if you can qualify for USDA loan, go for it. If
You
you're
should
looking
do
rural.
it.
Yeah, that was great for us because we were just outside of the city limits. So we were 5 minutes to West Lafayette and all of that area, and 10 minutes to Purdue. So it wasn't like we were out in the middle of nowhere.
A couple neighborhoods right out there on 52,
Yeah.
just outside of the West Lafayette city limits, if you will. USDA eligible, really.
And
really
a lot
enticing.
of agents, a lot of buyers, a lot of listing agents, they'll say, "Hey, I've got a property. Is it USDA eligible?" And it's, for those that don't know, it's relatively easy to look up, and we've got that site saved. So.
Shoot them a text and
Yeah.
they can tell you. Take it off your plate. There's a site you can look, but just ask your favorite lender and they'll do it
right.
for you.
I'm sure whoever your lender is will have that.
Called Jason and Scott.
You talked a little bit about being, the highest in the state, and then Scott said something about nationwide on some things. Does Fairway go nationwide right now, or?
Yeah. Yep. Fairway is licensed in all 50 states.
Okay.
And we've got a presence in every state.
Yeah, the nice thing is locally, Jason and I are licensed in Wisconsin, Kentucky, Indiana, and then we have teammates also surrounding states, Ohio, Illinois, and then, there's always referrals that we can go outside of those states as well.
Now, with a lot more people working remotely, do you see that being more beneficial?
Yeah, I mean, in the last 6 months, we've had people from Texas, Florida, California, moving to Lafayette, West Lafayette, but it works the other way as well. If you've done a loan with us in the past and then you're relocating outside of the state, it's beneficial for us to be able to kind of advise outside of the state sometimes as well.
Pretty cool.
Yeah, just keep our options open. As many things as we can do, right?
Yeah.
right.
So we touched on VA. We talked a little bit about FHA. He started to bring up USDA, and you talked about that. And then there's just there's standard conventional, and then jumbo, and is there anything else in your pocket there?
I mean, there's variations of all of those.
Yeah.
You know, there's first-time home buyer, there's AMI cap, there's, you know, I think too much to get into with the time we have allotted here, but most of the variations of, you know, your subcategories of FHA, your subcategories of conventional, we do all of those.
Building, you know, construction loans, I think that's worth a shout. There's a lot of confusion out there. Do we do construction loans? True construction loans? No, we don't. That's one area we don't play in, but I think it's worth a shout that most new construction, you can utilize any one of those programs, jumbo, VA, FHA, USDA, for the new build if the builder will work with you. There's ways
Just do
to
a
it.
one-time close, basically.
Yeah, well, and most builders are going to carry the cost of construction,
Yeah.
and I mean, that's alluding to Scott's point. There's a big misinterpretation about what is a construction loan versus just buying a home that's newly built. So yeah, just ask your builder. Most builders around here, barring, you know, a full custom,
Yeah. Where
something super,
they want
extravagant.
draws as they go, super custom. Yeah.
Most of our builders that, you know, we're preferred with, they all carry the construction loan. So
Cool. I know you said it'd take a while to go through all of the programs, but I would like to just touch a little bit on conventional just as a whole. You know, we've talked about, you know, USDA very strict, like the guidelines are pretty strict. FHA gets a little looser. What's your opinion on conventional as you go up?
Yeah, conventional financing, the difference in conventional financing and what we would call a government-backed loan, which is an FHA or USDA loan, a conventional loan, the risk is on the lender. When we do one of those loans, that is not backed any percentage by the government. So if you default on the loan, it's our dime there. So conventional loans are a lot harder to qualify for. We're going to want to see that you have a little bit higher credit. We're going to want to see maybe you have a little bit higher down payment. Payment history, it all matters a lot more for conventional loans. But when you look at subsets of conventional loans, there is credit given for a first-time home buyer, better pricing at times. You know, with conventional financing, sometimes the box that we talk about might be a little bit smaller to where you might not qualify for as much. Rates can be different for conventional financing as well. With us as the lender taking the risk there, there's Fannie Mae and Freddie Mac, which are the two government entities that write the guidelines where we do loans to without getting too deep into what those entities are. That can affect your rate, and that can affect whether you qualify or not. Obviously, if you qualify for conventional financing, I don't know, 9 times out of 10, I'd say that's the option that you're going to want to go. And you guys know that as real estate. Those are the offers you want to see.
And to Scott's point with Fannie and Freddie, a lot of consumers think, you know, a conventional loan is a conventional loan. Unfortunately, not all conventional loans are created equal. And that's why we even partner with certain banks, credit unions here locally that will only do one or the other. You know, they may only underwrite loans to Fannie Mae. And if Fannie Mae doesn't approve it, there's a good chance Freddie might. So being able to offer both of those truly gives us, I think, the best shot at getting people qualified and getting people qualified for the amount that they want or need.
And just on that topic of why do you as real estate agents want to see a conventional offer instead of maybe an FHA or USDA or something like that?
Because the seller doesn't have to abide those government guidelines.
The appraisals, obviously, what's of concern.
Inspection items.
Yeah, sometimes homes have some nicks and dings that we don't want to get addressed in an appraisal. Conventional offers are usually a little bit less stringent on that.
Yeah, I would agree. That's what I mean. You want to see conventional coming in as the listing agent, ideally. I mean, there's nothing wrong with the other programs, and we're seeing a lot more of them definitely in the past year. But just overall, like if I have 2 offers that net out exactly the same, and one's 25% down conventional, and one's a government-backed loan, probably advising to take the conventional.
And that's where we consider ourselves advisors. Sometimes for a borrower, it makes sense to go with an FHA loan instead of a conventional loan, even if it means that you don't get that property. Just with your financials, we can offer a better rate, less down payment. A lot of factors where sometimes we would just tell that borrower, hey, you don't need to look at a conventional loan, just where your credit is and your history. We're going to be able to offer you much better terms with a USDA or an FHA offer. Something like
Yeah, I think that's a good point because, FHA, the rate, it's not like set, but it's relatively, it's what it is. In the conventional, with you guys taking the risk, flexes a lot more based on the person. Is that correct?
Absolutely.
Yeah.
Yeah, that's fair to say.
Based on the statistics, I think you used that term earlier, of the person, their whole profile.
Yeah, that's fair to say. I think in both programs or all programs, the rate can be determined by a lot of different factors. But I would say with an FHA loan,
You operate in the bubble.
you're going to get a better rate if you have lower credit score. It just boils down to that a lot of the time.
One thing Jason and Scott did here recently, how long have you been there now, before I even say what it is?
Almost March will be a year.
April,
That was right before I moved into my house. So
yeah.
March, April. Yeah.
So they recently launched their own office led by yours truly, Jason Everette, sitting right here. That's why it's the Everette team at Fairway
Yeah.
Mortgage. But tell us about that experience a little bit.
Yeah. So in coming to Fairway, it's almost been 2 years. The biggest draw, I think, for Scott and I, it was me, Scott, and our assistant Ashley, who's been with me for, I think, 7 years now. The biggest draw was the autonomy that they provided us. So when working for a mortgage company, obviously you're a small fish in a big pond. But they really treat every one of their local offices like it's their only location. So they came up, we kind of, perused around town. They let us pick a spot.
Side note, thanks Rayco Realty for that.
Yeah. They let us pick a spot. And one of the most high traffic locations, I think, in our area, right on 52 in West Lafayette. Then we got to work on the contract. But the nice thing was that they gave us the autonomy as a team to kind of make some of those, call them executive decisions, when really it was their dime. They were the ones paying for the build out. They're the ones paying for the lease. But they truly value the opinion of call it the local experts.
They let you make your own learning mistakes and
That's
pluses
right.
and minuses.
That's right. They let us hire. They let us pick the location. So yeah, in doing that, it was pretty empowering. It was the first time I'd ever personally dealt with anything commercially. Bought and sold homes, owned rental properties. So residential was pretty easy. Commercial was a different ballgame.
Yeah. It always takes a lot longer than people think.
Yeah. The sales cycle was quite a bit longer than we're used to being, 20, 25-day deadlines, and this was like, kind of whenever.
Well, this is a full
done,
full
get
build
done.
out too.
Yeah,
So.
yeah. But to that point, I think now that we're settled, it was a lot of learning. It was, what do we need? What does an office entail? Everything down to, the vacuuming the floor. It's
Yeah,
something
like who does that? Yeah.
I did it on Friday. We kind of take turns. So, taking out the trash, emptying the.
Yeah, I hear you. I feel like we can relate a lot on that.
Yeah.
My company's a little over 6 years old now. I vacuum the floor. I take the trash out, or my mom does, or my wife does. It's pretty it's just random and responsibilities
My wife
change.
has it on her calendar. She's like every other week. If you guys haven't cleaned it or you're too busy, I'll come in and clean it real quick. Yeah. And her definition of clean and my definition of cleaner.
Yeah, my
Very
definition is
different.
more like picked up.
Yeah. Organized, controlled chaos. But yeah, so again, I don't think there's no way. Sure, it's Everette team, but there's no way I could have done any of this. I consulted with Scott, numerous times, and then Ashley's opinion. She's got a good knack for making everything look pretty, while Scott and I are just kind of head down in our offices.
Ashley keeps you guys on track.
She does. She's
goodness
an
for
amazing
organized
asset.
people.
That's
She,
for sure.
she keeps the realtors on track too sometimes.
She does. Yeah.
Not just your side. It's like we need this, and then you haven't sent it a day later. We still need this, and this. So.
We don't have to worry about things getting done. That's for sure. She'll push people if need be. But yeah, so all in all, it's been an amazing journey over the last couple years. And super thankful to have the team that we have. We've added a couple new people, so Chris Davis and Jackson Anthrop. So every office is now officially full in our new build out, which happened a lot quicker than we
pretty cool.
anticipated.
Yeah.
We were kind of giving ourselves a 2 to 3 year timeline for hiring, but
So how many total you got at your location?
there's five total.
Okay.
5 people, four sales, and then 1 assistant.
And on any given day, there might be a few kids running around in there.
And their assistant's licensed too, technically.
Our
so-
assistant is fully
Okay.
licensed.
Yeah.
Yeah, she actually does some of her own loans when the opportunity presents itself. It's
When they're not keeping her busy enough, she goes out and
That's
does one
right.
too. So, but
Yeah, I think Jason's being, a little bit unassuming over there, but it was quite a project. What company gives you the chance to design and build your own office if you don't own the business? Usually that's not an option, and I know it was a lot of work for him. Every week we'd check in. Hey, what do you think about this? What do you think about that? We go and we visit the site, and pretty cool to get that experience.
Yeah.
Alongside with doing mortgages.
and I was building my own house
Same time.
simultaneously.
Yeah, so you were checking on
Big
multiple
projects.
things.
So construction projects, just hit Jason up over here.
Yeah, GC Jason right here. He'll just do it for you. When you you said you've added a couple bodies and you called them out, and that's awesome. When you go to hire someone, like, what do you look for in a person or for the future of your company? And I pride myself on my business is not. And there's nothing wrong with this, and so I'm not saying it in a bad way, but there's real estate brokerages where it's heartbeat and a license, and that's not me. Like I want us to jive, I want us to talk, I want the relationship to feel good in the office, and so like that's something I try really hard to do. Like when you go to hire a new LO, like what do you look for in a person?
That's it. I think you hit the nail on the head. So for me, it's personality. I think we've got a really, really cool dynamic in our office. And Scott and Ashley will tell you every time we've hired somebody, I'll meet with them, I don't know, 2, 3, Chris, 5, 7, 10 times. But then I'll always encourage Ashley and Scott to take them out on their own because I want their honest feedback. I want their opinion without me there, breathing down their neck. So I think it's personality. I've told everybody I've hired, I said, mortgages is what we do. It's certainly not who we are. And I think having the personality that meshes with everybody else, clients included, is something you really can't teach. You've got to have those interpersonal skills. And a lot of times when clients are calling us, last night, they call and they say, hey, I got your number. What's your rate? And I mean, you have 45 seconds to a minute and a half to break those walls down and build a relationship. And if you can't do that, it's really hard to win in an uber competitive industry.
You mean they call you at night, not just 9 to 5?
Yeah, every once in a while. But yeah, so I mean, to your point, I think having someone that is going to fit well with the culture that we've built is the most important thing. I mean, running numbers, that's you can learn that. The computer does a lot of the math for you, thankfully. So just knowing the guidelines, learning that, it's just like any new job you may have, regardless of what you're selling or what you're offering product wise.
Yeah.
If I had to go sell Caterpillar engines, if I can sell, okay,
Yeah.
I don't even barely know how to spell engine, but if I had to learn about them, I could certainly do that.
The computer will do it for you.
Yeah,
Don't worry.
there you go. Autocorrect. I
I
think that's what we've prided ourselves on, is just having. I would say the long and the short of it is quality over quantity.
Agreed.
I don't want to have 15, 20 people in the office that maybe causes a little strife or chaos for everybody. We've all got families. We've all got social lives. And I think that's very, very important to keep us all grounded.
I agree 100%. It's everybody's got to jive, and in the 6 years, I'll say I've made some mistakes and we've parted ways with those, but it's normally mutual. I'll say that. So like they know, and I've turned people down before that have come, and I've had coffee with them, and then I've had a lunch with them, and I've just come back, and I normally talk to my wife a lot, and I'm like, this person they might have some numbers, but it's just not a good fit, and it's hard, but I don't know. It's just how I've tried to build the business.
Yeah, I think you've got a knack for that. I'm gonna take a tangent here that probably nobody thought of, but I remember when this was probably, how long you been in the business, Scott?
3 years.
This was probably 4 years ago, 4.5 years ago.
Okay.
You called me and said, "Hey, I've got a buddy. I know you're trying to build a team. I've got a buddy who lives in Kentucky.
Moving
and
back.
He sells bourbon and he's moving back. And I think he'd be a really good fit." And I'm like, "Man, sounds great. I'd love to meet him." I think Josh and I met a couple times. Once we met down here at Brewburger, and I'll never forget that. And then I never heard anything else.
Then he went and got a job at SA.
Yeah, his buddy apparently moved back, and he was like living happily ever after and bought a house, and I didn't hear from him. And
I kept on him.
yeah, and then fast forward, I don't know, call it a year after he moved back, playing golf in a men's league I play in, and guy brings me a bottle of bourbon, and he's like, "Hey, I know Josh Shives." I'm like, "Oh, so do I." And that was Scott. So turns out Josh was spot on. He said, "I think my buddy would be really good at this." And turns out Scott was one of the top in our company last year, and only 3 years of doing it. So I think having a
Should have been 4.
yeah, having a knack for finding the right people that kind of fit the mold. And again, Josh and I didn't work together. We didn't do deals together.
Not really.
We just kind of knew each other from the industry, and I thought it was pretty humbling that he came to me and he's like, "I heard good things. I think you guys would be a good fit personality-wise." And Scott and I are
There you go.
trying to be a force to be reckoned with. So
Good people find their way to each other. I mean,
That's
it's yeah.
It's worked out well for
So
you.
little tangent.
I like the tangent,
How
so-
I met Scott.
Scotty.
Some days I wonder why I'm not selling bourbon. I don't know.
Fun fact, you moved down there without a job and didn't know what you were going to do, and then you ended up with...
I moved back without a job, not knowing what I was going to do.
well,
It seems to be a theory here.
But when you moved down there, you had no idea. We can roll the clock back. Scott and I have known each other for a long time. We worked at Arnie's on 350 South here when we were like 18, 19 together. But you moved down to Louisville without any job plans. We're managing an Arnie's, ended up at Makers, and then I would call it your dream job at that point. You were like, this is fun.
Yeah, it wasn't work every day, that's for sure.
Yeah.
Getting to travel some cool places and
Kind of like mortgages,
cool
right?
people.
It's just so fun.
Yeah, we joke all the time when we go in my office, and there's some pretty cool bourbons that doing mortgages isn't so bad, but it has its days. So.
Yeah, I mean, who would want to walk around the Maker's Mark facility and tour people and drink bourbon all day?
It'd be miserable.
It'd be a rough job.
It's incredible that's a job that they pay you to do, and you don't have to pay them. I don't know, but
What brought you back here then?
family, kids,
Yeah.
Josh Shives. Hey, I think you'd be a really good lender. If you ever thought about I don't know, and
Yeah.
everything has a way of working its way out.
So is there anything you learned from selling bourbon that has tied into your...
I think it's important for everybody to do a little bit of time with corporate America, if you will. There's pros and cons to it, but it teaches you a lot about just dealing with people and getting out and seeing the world a little bit. I think it's helped me tremendously to put into perspective what we have here in Lafayette and West Lafayette is amazing. I mean, it's awesome, really is. So sometimes when you get a little bit stressed, you think back to what you learned at those other jobs, and just dealing with people is the biggest thing.
Did you ever, do you still know people that work down there? Of
course.
I'm sure you do.
Of course.
Did you ever go down and do like the VIP tour, Jason? If you didn't, you should.
No, we're trying. We're getting some guys from our corporate office in Fishers that we're going to try to make a little trip out of it, and Scott's going to facilitate it for us.
The regular tour is fun, but the Scott Mooney we walk around, do whatever you want tour was way better.
I'm not sure I have those credentials anymore. I don't know if I have those badges.
But
Yeah, I'm just enjoying my
Yeah,
coffee.
you don't get to much interaction with the lending side of things.
No, I mean, I have my only experience is when I've ever purchased or sold a home. But
And I think that's an important note. I mean, not a lot of people. I think I can say this for probably everybody in the industry that does what Scott and I do is nobody grows up and they're like, I want to be a mortgage lender. It's like we're not a lawyer, we're not a nurse, we're just, it's like, I don't know. It's not a job many people think of. So
Sure.
most consumers don't, we're not selling a tangible product. We're not selling TVs at Best Buy or something you can take home. It's something you only do every, 7 to 10 years. And I think knowing that it's important to have a little bit of knowledge and have a relationship with who you're entrusting with your finance, because it is a big purchase.
It's just the biggest financial thing that most people do, and they're like, no big deal.
Yeah. So I think that brings up an important point is, most people don't deal with the lending side very often. And if you're dealing with the lending side a lot, you're either an investor or someone that's making poor life decisions. And you have to buy and sell constantly to, I don't know, relocate or whatever. So
We're going to move on to one final topic here, and that's we've touched on it a lot of times throughout this conversation, but your relationship with realtors and how that intertwines into your business. Who wants to start that?
Yeah, that's the lifeblood of what we do. You guys are more important sometimes than what you guys even know. Just in my personal experience, not being in the industry for too long, 3 years, I don't think I'd be here. And I shared this with you last year. I don't think I'd be here doing mortgages. I gave myself sort of a timeline when I started this new career of how long I could do it, and I had to hit a certain number or I wouldn't be doing this. Obviously, I had other options and different corporate jobs. I was able to develop a couple of very
Obviously,
important,
like it's just like he's just got tons of offers hanging out there. Go ahead.
a couple of relationships that really that drove my business, and without those relationships, real estate, where we get leads directly from real estate agents. Without those, I don't think I'd be here and working for Fairway, working with Jason, and it's everything to us when we're able to develop that trust really from a real estate agent of, hey, I'm going to send you this person, and I know that this deal is going to get closed. That's important to us.
It's super important to us too. Like we want to know, and you tend to know. You don't control who your clients work with. You can make suggestions and normally throw out a couple of them, and then they call and they see they have that jive conversation. But it's super important then when you put your name on someone that they at least they're going to give it their best shot. And that's pretty much all you can ask for.
Yeah, that's a good point. You can't tell people who to work with. You can only suggest.
That's right.
yeah, and I think those suggestions probably go a long way, because me as just a home buyer, not in the real estate field, I relied on agents to say, hey, who would you recommend?
first point of contact. Yeah. And I think for me, the relationships that I've built in this business, all from realtors, of course, to title agents, owners of title companies, those relationships to me have become more than work. They're genuine friendships. They're people I care about their families. They care about my family. When we had kids, those are the people that are delivering food to your door. So I think in this business, it is very, very personal. And the fact that, my wife and I travel, we go on vacation with realtors. Our kids are friends with their kids. We play golf together. So it's whether we're doing business together or not, those are friendships that are genuine. And I think having that, I think of the older I've gotten, the people you surround yourself with they say a lot about you.
You care less about the large circle.
That's a good way to put it. So I'm very thankful for those, because a lot of people that do what we do, it's very, very I don't know, scratching the surface. The relationships aren't there. And I think, both Scott and I, and then, Chris and Jackson both, those true relationships, familial relationships are what matter. The people that send you their family members, their parents, their kids, and they trust that you're going to take care of them, be honest up front.
Or they ask for the impossible.
Yeah.
I recently sent over a family member, and asked for a 10-day close with Christmas in the middle. And they accomplished it for me, though.
Yeah, anything's possible, right?
Scott nailed it.
But you think about it, and if you're a buyer, wouldn't it be nice if your real estate agent and your lender were going to lunch together almost every day to talk about what needs to be talked about? It's
Absolutely.
I don't know, I wouldn't trust if it wasn't that way. So
The lines of communication being short help.
Yeah.
It's not, doesn't take a lot of effort to communicate.
You're both just very on top of what's going on in those files or transactions with those people. I should put it more general with those people's.
We'll take the credit on this podcast, but we can thank Ashley for that.
Yeah, I didn't think it was possible, to be really honest, but I called him. I called Scott, and I was like, this listing agent wants to know if we can do this, and this is the reason. It had a specific reason, and it wasn't business days. It was literally 10 calendar days, Christmas right in the middle. And he said, if you get me the paperwork by like 4 today, we'll get it done. And
It was a deadline by the end of the year, wasn't it?
yeah.
I remember that.
So it was, it happened, and I was impressed. So even I get impressed with the lender every once in a while.
I don't know about the processors and underwriters if they loved us on that one. Everybody's got their
The buyers make a difference. If the buyer's on board and they communicate well and get us what we need, it truly takes a village to close a loan.
I relayed that too, and I was like, "Here's the deal." They said if we get this, I got to get them the purchase agreement by like the end of the day today, and then you have to get them everything they ask for, regardless of what it is, the next morning, right away.
I think we could have closed a day early. I don't.
Could have done it at 9. Could have done it at 9.
Don't advertise that. Just a little bit, maybe.
Under promise, over deliver. Scott's motto.
Well, I appreciate you guys joining us today on Real Estate Copilot. Yeah, thanks for being here.
Yeah,
Awesome.
thank you guys.
Happy
Thank
to
you
be
so
here.
much. Yeah,
Thanks for the
yeah,
invite.
thanks
Talk.
for having us.
Yeah, make sure to subscribe to us on your favorite way to listen to podcasts. This is Real Estate Copilot. Thanks.